The screen fades to black. You think money is real. Cash in your wallet, coins jingling, numbers in your bank account. Safe, solid. It isn't. Not really. Most of the money you touch or think you own doesn't exist outside a computer screen. It's created quietly by banks out of nothing. And it runs your life. Every loan, every mortgage, every interest payment, all part of a system you barely notice. Let's start with a simple story. Imagine a bank with $100. Seems small, harmless, right? Now imagine the bank keeps $10, lends $90 to a car buyer. That $90 goes to someone else's account, maybe a dealer, maybe another bank. That bank keeps $9 and lends $81. Rinse, repeat, multiply. Suddenly, a single $100 deposit becomes hundreds of dollars circulating in the economy. All digitally, all created out of thin air. This is called fractional reserve banking. It sounds technical. It isn't. It's the quiet engine of our financial system, the engine that decides which countries prosper, which crumble. Now, why should you care? Because it touches everything. Prices, inflation, your mortgage, your student loans, your grocery bill. Every time a bank creates money, it shifts power away from you toward those who understand the system. Here's the absurd part. Everyone thinks banks are intermediaries. They're not. They don't just hold your money, they invent it with a keystroke, with a ledger entry. It's legal, it's normal, but it's also invisible. Take central banks. They set interest rates, they control money. But the truth is, commercial banks do the heavy lifting. They multiply currency, quietly deciding how much exists in the economy. Let's put numbers to it. In the US, less than 10% of the money supply exists as cash. The rest, roughly 90%, was created digitally by commercial banks lending to businesses, mortgages, personal loans. Every credit card swipe, every mortgage payment, every business loan, part of money conjured from nothing. It's fascinating. It's ironic. You save diligently, thinking you're safe. Meanwhile, your money is being lent, multiplied, and leveraged so someone else makes interest on your caution. Now consider debt. The more banks create money, the more debt piles up. Every loan is someone else's deposit. Every deposit is someone else's loan. It's a cycle, a system where growth depends on endless lending. And that's where the stakes climb. When money is created faster than the economy grows, inflation rises, prices climb, currency loses value. The system that seems invisible suddenly touches everyone. Here's the kicker. If everyone demanded their deposits back at once, the system would collapse. That's why governments insure deposits. That's why central banks exist, to patch holes in a system built on digital promises. It's also why financial crises seem sudden but are decades in the making, because money is created quietly, invisibly, until the numbers no one watches spiral out of control. So next time you glance at your bank balance, remember, most of it isn't real in the traditional sense. It's a story told by banks, a story of creation, multiplication, power, and risk. The irony? Most people never notice, and the ones who do rarely have the power to change it. Which begs the question, if money is created out of thin air and the system is built on debt and trust, who really controls the economy? And how long can it keep working before the illusion cracks? We live in a world run by numbers that exist only because we believe they do. And that might be the most expensive illusion of all.